Hey everyone, what's going on? Jamie Saettele here with the Midweek Strategy Webinar. It is May 4th, 2016. And how you doing? What's up, Masanori? How are you? We'll get started, I guess, with some of the dollar stuff here. So let's make no mistake about it. The dollar, I do think, I don't, think it's maybe done going down against Europe necessarily. But yesterday's big reversal amid obvious extreme bearish sentiment. I mean, there was headlines, like crazy about the bearishness, and markets are pretty perverse at times, right? We had been looking for kind of some dollar pickup, starting early, kind of last week, and then the markets obviously took just a complete dumping. The dollar did, and here we've reversed, turned around, and now we're essentially, it's the U.S. dollar FXCM index, and we're essentially right back at what was former support and is now kind of short-term resistance. So you could see the dollar come off a little bit here. Again, the euro, I think, as I mentioned on Twitter earlier, I think euro could pop off a little bit into mid-15s. I do think we might be, going into some sort of a consolidation phase for the euro, specifically, okay, before we try to go higher again. So let's just go through the charts first. So here's the dollar, the U.S. dollar index, the FXCM1, and look, you've got this index. Actually, I can see this index potentially making another high. From an Elliott standpoint, right? You can see a kind of a clear 1, 2, maybe 3, 4 going higher in a 5. But you got to remember, this takes into account dollar yen and Aussie dollar and pound dollar, whereas the ICE dollar index is primarily euro, right? So it's much different. And I think that would probably be based more upon, if we were to go much higher in this, or go back towards highs, I should say, probably be based more on things in Aussie and yen, okay? Just the way the charts are lining up. Let's dive into this a little bit on the short term. So let's go to a 4-hour chart, excuse me. And here we are at this level. We haven't really come off much. I mean, we came off twice kind of overnight and this morning, only to come right back into resistance. So, it's like euro, right? Euro traded down to 14.65 and hasn't really done anything. It's just kind of sitting here. So for that reason, I really don't care to, be long euro, right, without, kind of the showing of resistance, but the market's coming right back into it, just like euro's coming right back into support every time. As far as where, you might get a bigger kind of dollar, pullback, if you will, or where we might be going, just watch this line. This is just a median line. If you just take the channel, okay, just a simple trend line from the January high and the March high. Obviously, you can see if you take a parallel of that, extended from here, you more or less came through the low. I mean, we did crash through it and then came right back. And then the median line of that, a lot of good touches, but it's where we came, basically where we sold off from, okay, into the lows. So you sold off that into the lows, so you'd be looking for that to, provide some sort of resistance moving forward. For the dollar, and thinking ahead, maybe you get a pop up here and pull back as part of a bottoming process or attempt before trying to work higher in May. But the different dollar crosses obviously showing some different things, like Aussie looking much more bearish than, say, euro, of course, right? So with that in mind, let's look at the ICE dollar index. So this is a chart, the long-term chart, right, that posted a while ago, a couple weeks ago, and sure enough, the dollar saved from the abyss, it seems, here for a little bit. a simple channel, okay? Also providing former channel kind of off the channel top, and ended up providing some support. This index to me is much cleaner as far as where you're going to see resistance. And with that, let's look at the daily chart on this bad boy. And what you've got right here, the same lines obviously that you got, from the long-term chart. But this chart, you see this line here? Okay, just the trend line, like the first trend line off of the top. And you've got the March 13 high from last year, which was essentially the high until you kind of ticked it back before December ECB. That was December ECB, if you remember. And then you've got the high in April. Okay, obviously that trend line was right on the August high, and it was even some support, kind of, more or less back in February. And we did come off of that level, and trade around it before this latest plunge. Okay, and so if you look at this, over the next, really next week, 10th, 11th or so, you do get this line in line or intersecting the low from the 18th, from March 18th. So, it's one of the things I like to look for, or, when they happen, it's great when you get just a horizontal level, former high or low, along with a slope level. Okay. So with that, we've got a good intersection next week to kind of look at 94.60. And that's another reason why, I'm not super super thinking that the euro screams higher right here, back into its breakout. With the resistance up here being so well defined, that means euro probably comes back into, we'll look at the euro chart in a little bit, but 94.60 for euro would probably put euro back near 13.90 or even lower, even down here, right? Maybe even down on this trend line, which is 13, closer to, well, it depends when you get there, but it'd be closer to 113, to be honest with you. All right. So here's dollar index again, and there's that one or that 94.60 or so. Okay. I actually want to see if you get a channel on this. I haven't really looked at this one here. Okay, so this could be interesting too. Just seeing if there's even more stuff there. And it's not perfect, but you get the idea. Similar. Same area, right? So that's a good looking spot to trade higher to, which obviously would mean that near term I'd be, I'm dollar bullish for the most part here. But more so against the commodity currencies like Kiwi and CAD and Aussie than necessarily the dollar itself overall. All right, so with that, dollar SEK. I've talked about dollar SEK, the Swedish krona being a good barometer, if you will, of the dollar at large. It's a good confirmation thing to use, for example, with with euro and dollar index. And in this case, obviously, you see that we've traded. It's a perfect channel at this point. Okay, so it's a perfect channel. The median line for that is obviously way up here, 828, and that would be a natural place to expect some sort of resistance and a response in the dollar. For this you could see, but this could be a three-wave move off the low, or you could be in an impulse. Even if you are in an impulse, the correction here took from June of 2012, really until March of 2014. So it was almost 2 years And if that were to happen, you'd be going sideways well into 2017. In dollar sec. So either way, the resistance still would look higher in dollar sec, and you can see the chart here following through on the reversal, et cetera, et cetera. If we put this up, not sure if this has any validity to it yet, just because there's really no touch points on this except for the 50 line down here at the low, and it could be something to watch. It's interesting to me that you do the intersection of the horizontal level near 830 and the median line would also intersect this again around May 10th, 11th, 12th or something for dollar sec, which we already said we'd be looking at dollar resistance probably into mid-month based on the dollar index chart. Okay. So that is also an interesting look. So all these dollar stories, dollar sec, dollar index, et cetera, reversing at big levels amid negative sentiment. Obviously, remember that really negative sentiment doesn't mean that it's a low that's going to last forever. It just means it's a low. Okay. Well, it doesn't even mean it's a low. After you've responded like you have, it's a low. And that brings up another point. In analysis and in trading, you can't have any ego at all. Okay, like you cannot stick to the same story, and if it stops working, or you get information to the contrary, that you say, well, I'm still a big dollar bear because the dollar. I guess it's a matter of time frames, but when you see price action like this at levels like this, with sentiment like this, you do have to kind of change your tune. Okay, especially if you're trading on, a relatively short-term basis. If you can be a dollar bear with an outlook of years, right? But that's not what we're trying to do here. So, we're thinking that the dollar can trade higher, and then you'd want to be bearish, right? So don't forget, really extreme sentiment readings do tend to happen, or can happen towards the beginning of a major move in that direction. So, for example, when dollar sec and euro dollar broke out, right? Dollar sec broke out here back in August, September of 2014. The dollar bullish sentiment was off the charts. It was by no means a top though, right? Same thing with euro, which we'll go to now. Right? When we started breaking down in the euro, okay, euro bearish sentiment back here was off the charts. By no means was that a low, right? You did have periods of consolidation, and that's the thing that I want to stress, and that's what's going to be really important to watch. Okay, if we get some sort of a consolidation, sideways movement, whatever, that kind of forms some sort of a flag or whatever, you get kind of a corrective, choppy move down into support. That would be a great, opportunity to buy euro. Okay, just because you're coming off of a sentiment extreme doesn't mean that top's going to be in place for that long. So that's something to I think to kind of keep in mind. And on euro, here we are. Not a whole lot to add here. We've traded into just by a few ticks. We did miss resistance on this, but you can see how well this type of stuff does tend to work sometimes. The August 24th close, 116.19, daily reversal resistance, that ended up basically being the high. It's 4 ticks off of it, really 3.2 ticks off of it, right? The high was what was this? On this high, at least it was 116.15.6. So, really, solid resistance, and have come back, and we're essentially unchanged now for the week. It's opened at 14.59, former high, obviously 14.64. So we've come back into support. We're testing it. This is the median line again. If I'm going to be a seller of dollars, it'd probably be against the euro. At this point, I'm not, chomping at the bit to do that just yet, as per what I just mentioned, everything on dollar index and dollar sec. NFP's coming up on Friday. Not sure it's going to be all that huge of a deal. Again, not because of anything, I think, fundamentally, but quite simply because you've already had such massive movements into resistance, okay, and then come back into support. It's like we've already had a huge week on both sides of the market. So, NFPs in 2 days, but if anything, I think it would be actually worth looking at a strategy to fade the NFP move, maybe 1550, and potentially if you get, extreme weakness, but I'm not sure that'll happen, but we'll see. For the rest of the week, I'd be, 1550 would be a region, 1530, 50, I think would be a region to potentially look at. So nothing really to look at as far as short term on the dollar or on euro dollar for me, excuse me. Pound dollar is a little more interesting as far as trading levels are concerned. Go to the short term chart for this. You've got 244-hour chart. Okay, so I still think that pound can go up into 149 or 150 or so. Again, that's the trend line from the 2014 high. Okay, if we look at the weekly chart, this was the weekly chart, and you can see that there is a whole lot of stuff going on up there. You've got even 148.30, but the trend line, all that stuff is a little higher in this region. And what we've done here, basically 2 weeks ago, is completed a head and shoulders bottoming pattern. Okay, reversed at the channel in the year open. All right, we've come now into very minor support from 44.60, simple high from 330 high. Okay, if you zoom in, you can see that you do have something in the way of some sort of slope support here. Okay, we have bounced off this level, so I guess that does give it a little bit of validity. And what I'm looking at here is potentially a bounce from here, maybe a little lower, but a bounce from this region up into, say, 46.40 or so, and then would be looking at maybe another drop into 43.50. Okay, and where I'm going with this is if you can get a three-wave movement to the downside from the top back into 43.50, which is just a short-term trend line, and basically the neckline, but more importantly, this has been a line that's been really decent for support and resistance on both sides of the market. It's essentially the neckline, right, of the head and shoulders. This is just a simple retest in which you basically could get resumption back up into 149, right? And again, I'm not taking into consideration fundies or what have you here, right? I'm just saying, looking at the geometric pattern on this, looking at the well-defined support resistance levels, you could get a drop down into this region over the next couple of days, and then move higher. And again, on the dates thing, this looks like it's around May 9th, May 10th, which again is when we'd kind of be looking at potentially, based on the dollar index charts and stuff, when the dollar could be into resistance. Okay, so there's a couple trade ideas in here. You could try to play it higher off of this right now, or maybe after a dip into 43.30 or so. I'd be more likely to want to trade, into resistance on the short side, okay, which could be up near 46.40 or so, and then take it down into 43.50, okay, because what you're doing there is you're essentially identified, the very near-term picture for the dollar, pressure to the upside for the dollar. So you're going with that if you're looking to kind of sell some resistance in cable at some point over the next day or two. And maybe that happens on NFP, right? Maybe you get a spike higher, dollar spikes lower on NFP, and then everyone freaks out again because the dollar is going to go to hell, and then everyone gets burned again because the dollar doesn't go to hell, and you get what I'm saying. So that's a possibility moving forward, at least for the rest of the week. Let's look at dollar Swiss. Dollar Swiss, this was the chart over the weekend, had identified maybe 94.24 as a level, and big support. I mean, just huge. See, in order to get really positive on dollar Swiss again, you really need to see it, kind of base probably for a while. Okay, but the picture here, or the story is the same. You do have a 7-wave decline, okay, from the top in November, in which case you could see a very important low form, believe it or not. Okay, again, this goes certainly against the narrative of the dollar trading up into resistance and failing again, but it is what it is. So something to look at with dollar Swiss over the next few days. See if we hold up. See what the short-term pattern looks like. Nothing to write home about necessarily. The good stuff here is that you can see you've got these low, high, low, so you at least have the potential to follow something on the upside. And this is by no means going to be at this point, going to be a confirmed slope. I wouldn't even keep it there for right now. But what I'll watch too is see this median line, just the median line from the modified shift fork, which is just a trend line, and then cut through the middle. So you can watch that level too, because you can see we've had a lot of play around that spot, right? Remember, ECB was right here, right? So you've had a lot of stuff go on here. So we're getting into there now. If you can break back above that, it would be a positive, at least in the short term, for dollar Swiss. And at least moving, positive for moving back into this resistance, which actually was resistance. We took a long target there and stopped the rest on break even, or sorry, not break even, a little worse than break even on the last dollar Swiss trade. But yeah, focus on this level more or less now for dollar Swiss. Okay, now we get into the more exciting stuff. Dollar yen. So dollar yen, I think there's actually a near-term opportunity on the upside for dollar yen. Scary as that may sound, we have essentially crashed, as we all know, in dollar yen, and came into the week looking for support lower. Okay, like 103.70s, 105.20s, and that could still happen, but you might actually go up to 108.50 or 60 or so first. Okay, so be watching this level here. Again, this is a slope that's just based on the tops from 12.18 and 129. Okay, and this was 129. That was the negative interest rate policy deal right there. And you can see that you've got pretty good touches on that through here too, right, with support and resistance. So this level is one that I'd watch for resistance. If we get there over the next few days, it's basically 108.70. And then if we dive into the short-term picture, here's the short-term picture. I tweeted out this morning, the market had held the 61.8 retracement of the rally to the tick here, right, basically. So willing to buy against that, basically. Stops below 106.20, which is the low here. 106.23 is the low. And essentially watching for support in the 106.80s. Okay, just real simple, just former, kind of former resistance, right, on the way up. So go even shorter term, 15-minute chart. You can see, resistance, kind of support, right, came in. So if you do get a chance, tonight, dollar yen comes in a little bit, this is the level, in my opinion, to watch for support. Okay, 106.70s, 80s, stops down below 106.20, looking up towards 108.60, which actually is this high here anyway. And you got former support over there too. So that would be an immediate kind of near-term picture for, for me, for dollar yen, for trading it. And then there are some other yen crosses that could get interesting, and I'll take a look there here in a moment. But let's move on with the dollar crosses. So Aussie dollar. As we know, Aussie dollar, yeah, so some big resistance, obviously. This is one reason why you think that maybe the dollar indexes and the FXCM1 eventually could get to another, low, because it's not out of the question that you drop into lows with this. My opinion is that you don't, just because you have a January low in place and an impulsive rally off the low. But there's all kinds of possibilities, including a flat pattern, A, B, C, extremely well-defined resistance. A lot depends, obviously, on what happens on the daily. You've got right here already breaking below this median line. I'd still, from a trading perspective, would much rather wait and see if you get a retest of the trend line, okay, which, the longer you wait, the higher it is, but it's going to be, as mentioned last night, in the 75, 60, 95 region. And the next big support, probably around the year open price, which is 72.80s. You do have the former resistance, the highs up here from earlier in the year and late last year in October, late last year in October and December, is 73.80s. But I don't have anything there on a slope basis, and obviously prefer to have some sort of slope in the way along with a horizontal level rather than just a horizontal level. Okay, and turns out this did end up being a top back here in April, and since then it's just been, the whole market's just been, it's kind of done nothing except when there's Aussie data and the market gets absolutely murdered. So the way to get into the short position would be to, again, short on the underside of the broken trend line, at the 75, 60, 95 region. So if you get it, you get it. And we'll, wait and see if we get it. But yeah, like I said, a lot will depend on how important this low is on if you've got, if we end up getting support, for example, on the pitchfork, right? I mean, I would think we would, just because we had such a perfect touch up here as resistance. So like this thing's definitely in play, right? And then, you're going to want to see signs of, support, capitulation, whatever, when or if we get down to this region. Now, from a seasonality perspective, let's remember the commodity currencies in particular, don't really turn up for a while. Okay. So, you've got, the next possible turn date really is not until the end of May, towards the end of May, as far as the seasonals are concerned. We're in a seasonally bullish period for a dollar, and especially against commodity currencies. Okay. So just remember that. Kiwi, I really do think that Kiwi is going to crash. I know I've said that a lot, but I believe it, and it's because of the analysis. I mean, there's so much that's supporting that, that stance. We look at, right? We've seen this before, right? So here's the massive on balance volume divergence. I didn't even notice this, but yesterday's volume in Kiwi was the highest volume we've had in at least a month. So that's a really good sign from a bearish perspective. We'll be wanting to look at ways to get more short Kiwi dollar moving forward. So, you have this, you have the seasonal stuff I talked about. Quite simply, you have like the choppiest uptrend ever. 2 equal legs long-term resistance levels on the downslope, shorter-term resistance levels on upslopes, even shorter-term resistance levels on upslopes. And check it out. If you look at it this way, I'm not sure how many of you are familiar with the concept again of kind of gaps or space with median lines or with trend line analysis, but this was resistance, right? This line essentially is resistance, and traded into a number of times, and here we've actually reversed before it. Okay, so we have reversed before support too. Okay, with this probably being support. Let's look at this one. So the next trigger for this thing is if basically break the trend line. I did note to a client this morning asking where might a target be. I truly am of the mind that, again, I think this whole thing could end up being quite simply consolidation or a corrective rally, and that Kiwi is going to end up down near 59 at some point this year. That's a distinct possibility. That's the double top target from 2011 and 2014. So that is where I will be kind of looking at for Kiwi over the coming weeks and months, and probably more like months. But on a near-term basis, let's look at a few levels. So this is a weekly chart. Where's the median line on this? It is like in the mid 66s over the next few weeks. Okay. So that's interesting to note, mid 66s or so. Then 61.8 of the rally from January is 66.15, 66.16. That level is one to keep in mind, especially because if we were to drop below, I'm not including this little spike here in the measurement that I'm about to show you. I'm measuring off this low, which is the 422 low. If you were to break below, again, break down, basically below 68.34, you get a double top that's confirmed with the last two tops here, and that would bring you down to 66.15, which again, 66.16 is the 618 from January. So that 66.15 area, a very clear shorter term target for Kiwi on the downside. Okay, so that's kind of where I would be thinking as far as looking at Kiwi on the downside for a shorter term target. Let's look at the short term picture for Kiwi. Okay, so we've come into resistance. I know there's like a lot going on in this chart probably, but apologize for that. Support line here, basically, kind of not super precise, but you've seen some supports around here before. Given the analysis and everything, I think, you do have to be looking on the short side as far as, trying to stay with your short position, and also kind of looking at opportunities to add to the trade. So this is a potential bearish fork. Okay, go to an hourly chart. First glance, it doesn't seem like there's a ton to work with on this. Again, you can draw all the stuff you want on a chart. It doesn't mean that it's valid. You do have to have touches on it. This structure clearly has touches on it, right? The uptrending one. So we haven't broken it yet, and we won't break it until we're, below it over here. So like a dream scenario, in order to get more short Kiwi, would be you break down here, right? And then maybe you kind of come up into the median line, which would be near 68, which would be kind of near a former low anyway, and then you continue lower, right? But just, watch this anyway near term, and see if we do get some consolidation higher, then my focus would be on this line. I'll make it a different color so you can see it's blue. It should probably be red to make it bearish. It would be on this line because you do have, there are some, it was former support, right? So that could be a level that, you know, if we trade into it, you know, at some point over the next couple days, whatever, maybe that becomes resistance. Okay. So be watching for, you know, resistance on this, or the other and preferred option, I think, would be if we broke down, again, broke support, found low on a median or on this lower parallel to really confirm that it's active and working, and then you know, rebounded higher into a resistance from the same structure, and preferably even former trendline support becoming resistance, and then kind of spilled lower again from there. So that's Kiwi, and again, it's, I think, one of the better looking charts. This is a short-term Aussie. You should be familiar with this, right? So we bounced kind of a few times, but I don't know, seeming to fail here. But, you know, again, I'm not one to chase this. I do think that you could still get a retest up near 75, 60, 90 over the next couple of days. And if you do, it's, you know, it's a short for Aussie. All right. How about dollar CAD? So we spent a lot of time on dollar CAD, you know, recently with the last week's webinar, I guess. Let's see. And oh, I forgot to. Here is, guess what the top 1 month short is on IDO? It's Kiwi dollar. So there have been 28 such matches with price history in Kiwi dollar. 75% have been down. 25% have been up 1 month later. Okay, the average down is 1.2%. The average, what's this? Oh, sorry, no, the average is 1.2% down. The average up is 2.5%, the average down 2.5%. Okay, so you get that part. The biggest decline would have been almost 9%, 2010. That was actually the flash crash period. And then the best was 4.4%. That was in 2009. So whatever, you can see the results there. So just, again, add more evidence to the bearish picture. And remember, we were looking at IDO on dollar CAD just a few days ago. And it really confirmed, I think, what we saw there. With that dollar CAD, so I mean, we have hit and come into some crazy long-term levels. I mean, all right, I do these charts typically on Sunday, the longer-term page, and you can see we came into this. I mean, literally, this is a monthly chart, okay? And this goes back to 1986, and we hit that level like to a T, like to the tick the other night. Okay, hit this one too. Perfect as far as being, you know, resistance or whatever. You know, 5-wave decline. Again, minimum retracement you're looking for is 133 because that's the former 4th wave, and that's from an Elliott standpoint. I think we head back to 138. There's a couple reasons for that. One is simply it's where you open the year. But two, it's also the 61.8. It's also the long-term bullish median line. Okay, so you can see here, this is the long-term bullish median line. I mean, it's been pretty big, right? So if you were to go back there, we'd be back in the mid 138s. Again, would not be a surprise at all if we got back to that level. I don't know, when that's going to happen, but that's where I'm looking. So what about trading this, right? We've traded up into, well, now we're close to 129. So we've gone right through pretty much everything. As crude oil, I guess dollar CAD got the memo starting yesterday that crude oil was going down, because dollar CAD continued to just sink and sink and sink, and crude oil was, topped. It topped a while ago, right? Crude oil topped on the 29th, right? We nailed that resistance at 46.82. Top is 46.78. Crude's coming down hard, we could, if this ends up really being a wedge and you're going to test the lows, then we're going to get to 138 much sooner than people think in dollar CAD. Anyway, going to the short-term chart, going to a long-term chart first. Okay, so this, let's see here. I'll just look on this one. I don't really have anything to say on that. Okay, the weekly chart. You zoom in here, right? Okay, so we're at, a pretty big area, 2830. We've actually gone through it here today. See what happens the rest of the day. If the market wants to come back or if it just continues to go higher. But long-term charts are great because you can see levels clearly. That low from that week is 127.43. That high from that week, last week's high, is 127.16. So we've got 27.16 and 27.43. So let's look at that on a short-term chart. See where that would put you. Okay, so here's again hourly chart, right? This is the slope that we've been kind of looking at on a short-term basis. We're finally getting a behavior change in this market, okay, as we've gone through pretty much, well, everything except for the top of it. Basically, what you want to watch for is old support, or old resistance, excuse me, to become support. It's a gradual process. You broke through resistance, was hoping that we get a pullback and that old resistance would become support on the upside. That didn't happen. We just went straight up anyway, kept going up. But the next level to look for, old resistance to become support is this one, the median line essentially, right? Which, as you can see, you've had all kinds of stuff happen. It's actually been support before we knew it was there, but that angle has been a pretty good one. I just want to see where this would go back to actually for fun. So that's interesting, right? Okay, so you've got support that you'd be looking at. And remember those levels we said, 27.43, that's the low from a number of weeks ago. And then 27.16, which is the high from last week, which is right here. And you can see lots of consolidation around there. And you would actually have, over the next couple of trading days, in fact, I guess this would be Thursday and Friday for the most part, you would have intersections with those levels with this median line, which again has been resistance at times throughout this entire decline. So, that's where I would be looking at as far as support for dollar CAD, okay, on the short-term picture. So there are the dollar crosses. What about what about some other crosses like euro yen and pound yen actually? So don't forget euro yen, the big support's probably down here at 117.35. Don't forget we're sitting at the 50% retracement. So we've been trading 50% retracement of the rally all the way from the 2012 low. Okay. I mention that because, you know, if we end up breaking through this level, we tested it so many times. If you end up breaking through this, I mean, it might not be very long until you get to 117.35. Okay. You know, near-term picture, you know, I think you could maybe look for supports on I probably wouldn't look for support. It's a pretty weak looking rally. Looking more like a flag than anything. Right? Have come into resistance actually on a short-term basis. So interesting. One cross that's interesting is pound yen though. And here's why. So remember this structure, we just hit the lower parallel from that. So if you can get, you know, pound yen to, or this cross, I should say, this is also a trend line. You know, if you can stabilize around here, make a little bottoming pattern, there's an opportunity with a really tight stop to be long pound yen on this. Put that in the update later tonight, have more to write about it, I guess, but this came across my mind right before the webinar. I thought, what's pound yen doing? And you'd be looking for resistance here at 148.40, okay? And then, of course, Euro CAD and Euro Aussie, which have just gone ballistic on the upside. We highlighted this in the update, swing update on the 28th as a potential bottoming process. And, you know, we had two levels in mind, 40, 35, 43 as a bottom, or that day, which was a doji, and it ended up being that day. And it's been 140, let's see, like 800 pips later. Here we are at the median line. It goes back, you know, channel, goes back to the 2012 low. So from here, you'd be looking at this level as, you know, basically 45.50. You need to see some sort of a pullback. I mean, you can't chase this into resistance, okay? Resistance for this, by the way, would be starting at 150.20. And then Euro Aussie, which has been just another huge beast. Same thing from last night, wrote about this. Is actually really well defined for, you know, potential support. Again, you'd have to have a pullback over a number of days, but you'd be looking at about 151, 150.80 or so as a support region. It's, you know, combination of a bullish median level here, which again, you did have some trade around there, along with a very well defined kind of a flat slope, but it, you know, originates from the 2015 August high and the 2016 February high, and that entire slope, as you can see, actually crosses through highs back to January 2014 all the way through. So clearly an important angle for Euro Aussie dollar. Okay. Did have some questions. Someone asked, Masanori actually asked Aussie yen and Kiwi yen. Aussie yen still in that channel. I don't really have a lot to say about it here. I mean, you know, yeah, we're in a channel. This, you can see here, you had what could have been an inverse head and shoulders bottoming pattern, and we just traded below. Yesterday, we broke below the left, what would be the right shoulder. So you do have potential for a failed pattern, in which case the target for this would be down near about 74 60, 70, 90 or so. Okay, so you could be heading a lot lower towards the bottom of the channel based on that. The best way, or resistance wise, you might be looking at, some sort of a retest of resistance at some point, or former support, excuse me. You didn't quite get it yesterday, but for me, the response at the channel, I mean, that's pretty clear. So look towards the bottom of the channel at this point for Aussie yen. Personally, I don't see a trade necessarily right here, at least from the way I look at things. I mean, a riskier breakout type of trade would be to just be short here right now, with a stop above yesterday's high, outside day breakout, okay, with a failed head and shoulders pattern, and just targeting the bottom of the channel. So, if you did that here at market, you've got 79.90 is the spot price, 81.90. So, you'd have like a 200 pip stop, but you would be targeting down towards, below 75 on that. See this spike low here? That's the Doha gap open low, if you remember that. If we do get a move higher, which I think is a possibility, because looking at both Aussie dollar, little rally into resistance, and if you get dollar yen move up into 108.70 or so, then you could certainly see 82.45, and that's when I would be interested in a trade on this. You do have, it's actually really good looking resistance, isn't it? I mean, look at all that stuff you've got there. Got all these lows. So there's a lot going on in the mid 82s. So if we get a rebound up into 82.50 or so, that would be an area to consider a short, in my opinion, for a move. Again, could be all the way back down towards the channel lows. Let's look at Kiwi yen. So Kiwi yen might be about to go down the toilet. This is a 2009, 2012 trend line, and you can see that slope has been something magnificent for quite a while. And yeah, you'd be looking at, again, this trend line, which is just off of two lows, but you have an intersection with that. You can see at the former resistance from back in 2009, 2010. And that would put you down again near 60, below 69. Okay, so you've come off of resistance as well. So yeah, Kiwi yen might be in some serious hurt moving forward. I'm not sure if that speaks as much to dollar yen as it does to Kiwi dollar, which, again, I'm super bearish Kiwi dollar, as you know. Dollar yen, a little trickier for me. I think that, as I mentioned earlier, we can get into that 103.70, 105.20 support before we get the big rip. But near term, I am wondering if we get up into that 108.70 area, right? So, shall see. Getting a little bit of a bounce here in Aussie. I hope Aussie bounces a little bit so that you get the opportunity to sell it. You can see here, we are, late U.S. trading, if you will. The market is actually trying to bounce a little bit. At least it's not going down. Kiwi, same thing. All right, well, that's that. Let's take a quick look at some other markets. As you know, crude oil, we're looking lower there. Did get the top on that, and looking at two different charts for crude. You know, you do have this resistance. The long-term resistance was hit quite perfectly, right? I mean, that's pretty cool right there. Long-term resistance, this goes back years and years and years and years, and yet it was precise. So when viewed in the context of this chart, I mean, you know, this is nothing more than, you know, if we stop there, this is nothing more than just a, you know, a pullback into resistance, and we'll go back and test the lows before you get the final low. Near 25 bucks, or a big low near 25 bucks. I don't know if it's the final low. Let's look at, here's the other chart. Again, this is nearest future chart, and this says the support is probably near 41, 30, 40 or so over the next day or two. So, you know, you could go lower and bounce there. You know, this is really the decision point. If you drop below here, then the market's toast. S&P 500. I don't have much on this. I've got basically the long-term cycle chart, which, as you remember, we actually called for a top on the cycle and back in April, and it actually did end up being the week of the top. It's still the top. It just, you know, we went sideways for a while, so it didn't seem like the market was doing anything, but that was the top. And if you are not familiar or forget what that cycle is, let's see, here it is. So this is the 24-week cycle top, right? The top from 522 to 11.6 was 24 weeks. The top from 11.6 to 422 was 24 weeks. And if you go back in time, you can see there are a ton of huge, important junctures on that 24 fixed length cycle, okay? Including going back to the tech bubble. In fact, it goes all the way back to the 1930s. Talked about that a little bit. On the shorter term trading stuff, this is what I'm looking at in the right now, and it's a bearish slope. But it's not like crazy bearish, but this is, the market is trading on this. So, you know, you continue to kind of bounce around and find support, and this would be, these are your resistance levels, okay? You know, I think that, let's see here, hold on. I put up a chart over the weekend of the let's see, where's this chart? Put up a chart over the weekend of the Russell 2000 ETF. Okay, this, you know, this is much cleaner looking slope than the other charts. So it's a weekly chart, okay? So this goes back a bit. But look where we just found resistance. Okay. It's last week. Peaked right at resistance. And then if we can go to daily, you can see this even cleaner. There is a very good bearish slope going on here too, okay? So, I mean, it's pretty bearish as far as I'm concerned on this chart, which, you know, small cap indices. So it'd be looking lower. Again, your support on this, you know, same area where you had support down here. Okay, that's pretty far down. So that's what we're looking at on the short-term picture, or I guess more like the medium-term picture, depending on what you define as short-term and medium-term. And this is the S&P 500 on the short term. So basically, Masanori and anyone else, if you break this down here, then basically look for it to be resistance. I mean, it's the same thing as what we've been doing, right? So break here, this is resistance. You could draw in this, I think. Let's see here. Hold on. Just not sure how. I had this before, but I mean, you could follow this. This is a steep downtrend. I mean, it was pretty close to resistance up here. It's even steeper, actually, isn't it? But typically, market short-term slopes that steep typically don't last that long. But, you know, look, follow it as long as I guess it's working. So yeah, you could follow something like this. It does look like their former lows, just quite simply 2020 to 2028 or so would kind of be a level for the rest of the week that where you might get some sort of bounce from. It's 20 points lower. So again, market could take quite a spill here. You get below this, which you're at this downtrend support, probably no good support for a while, 2028 to 2021. At the same time, this is your resistance. It's been resistance, right? Lots of trade into there the last couple of days, yesterday and today. All right. So that is the S&P 500. We'll take a look at, you had a question on the Nikkei. In the Nikkei, I would watch this. This is just the trend line, but you can see it's a channel. Okay, so it's about 15,600, so it's like 200 points lower. And if you're going to continue in some sort of a range or bounce or whatever, that's really a level to watch for support, in my opinion. Okay. You know, if that breaks, then you're talking about it's a long-term chart, but you're talking again. This showed this last week, but you're talking then at that point about heading lower into a retest of you know, of the resistance, right? That was, you know, old resistance line back to 1996, and that actually was precise support in February. Getting back into that level basically just sends you to new lows before you get support again. But short-term considerations, again, right here, about 15,620 or so, currently 15,880. So that's your level to watch on the Nikkei. Cool. All right, I'm going to wrap it up there. I'm going to get this archived, as always, for everybody. But I think we've covered good ground here with the dollar and with everything else. And everyone take care and have a good rest of your week. All right, bye.